I'd like to thank Adam Cox and everyone at Open Banking Expo for giving us this opportunity today to have a discussion on how smart the data is as we build open finance and head towards an open data economy. I'm going to let everyone and hand over to them to do the introductions, but I would like to just say a couple of words about myself. I'm a corporate communications strategist with sort of a company called Comms Alchemist. I also spent 2 years working at the Open Banking Implementation Entity, and I co-founded Open 51, which is the Association of Women Delivering Open Finance. And I'm really delighted today that Open 51 is sponsoring the panel, and we have 3 of its members joining the discussion. So if I can hand over for some introductions, and I'll start with Emma.
Hi, everybody. I'm Emma Scooley. I'm the CEO of AccountScore. We've been working actively in the open banking space since 2016. AccountScore operates in the UK and the US, and we provide not only the connectivity, but also the analytics on consumer and SME data, primarily for lenders in the marketplace.
Okay, Ilva, do you want to introduce yourself?
Yes, hi, I am Ylva Ortengren. I am a COO and also co-founder of a company called Simply Asset Finance. We founded Simply about 3.5 years ago with the aim to serve SMEs. So in the lending capacity, we offer SMEs lending and try to sort of work out how do we build finance that work for the SME, but not only work for the SME, but also get to the SME in a way that works for them. And prior to that, I've got a background in banking and finance across Europe and Asia Pacific, and have been now in London for the last almost 10 years.
Thanks. Sam, do you want to introduce yourself?
Yeah, hi, I'm Sam Seaton, CEO of MoneyHub, and really pleased to be here with Open 51 because the amount of data that we're seeing in this data-led economy through open banking and the whole digital transformation that's taking place, for us, particularly in MoneyHub, it's to do with the wealth, pension, and asset management space. But more broadly, it doesn't really matter what business you're in now. So really excited to be here. My background is in institutional product providers and genuinely have grown up around enterprises where they're always wanting to do the right thing by the consumer, but I think are really struggling to be what I would call consumer-centric, because it's very easy to say that, but I think it's very difficult for enterprises to do that.
Thanks, Sam. And Matt, do you want to introduce yourself?
Sure, thanks a lot, Amy. It's great to be here. Hi, everyone. I'm Matt Hicks. I'm the Commercial Director at Codat. Codat is a technology platform that enables open accounting. So in a very similar way that open banking enables a consumer to connect their banking data with a third party, Codat enables small business owners to connect their accounting data with third parties. We've been extremely busy this year with an unprecedented year for small business lenders during the COVID crisis, and I'm pleased to say we've hopefully done our bit to enable that lending to happen more quickly to help SMEs at their time of need. So really pleased to be here and looking forward to the discussion.
Thanks, Matt. So let's kick off. I mean, open banking and the evolution to open finance, it's having a huge impact, or starting to have a huge impact on financial services, transforming business models, products, all sorts of things. But we know that data is at the heart of that transformation. And I'm wondering if, we've had discussions on previous occasions about the benefits of real-time data and how much those are transforming things, but the quality of the data overall, how smart is it really, is what today's discussion is about, and how does that impact customer outcomes? So is it important that the data quality is looked at in order to guarantee good customer outcomes? Can I hand that to you, Sam?
So, unfortunately, the data doesn't lie. So if the data quality is poor, then clearly, we're going to go down rabbit holes we shouldn't be going down. But the one thing I would say is that with open banking, which I kind of think of like as being one-dimensional, and open finance is two-dimensional, and then I think open data is the full 3D economy. I think we have got a quality of data coming through now. It's really the ability to, I guess, refine the data. So you talk about like oil, and data is apparently the new oil, which I guess is true. But it's really the refinery that enables you to do things with it and do it correctly. So it is very important to get the refinery. And for us in our world, I guess it's the categorization. For Money Hub, it's the categorization engine correct. Because without that, I think it is difficult.
Okay, I mean, I've heard it's not described as oil much anymore. They're calling it the rocket fuel. So I wonder if, that's going to move things forward faster. Would everyone agree, though? I mean, do we think that the data needs refining, but there's no gaps or missing? I know that, we've looked at various issues before about bias, and that's come up. But is anyone wanting to come in on that sort of beginning sort of focus? It's more than real-time data. I think that's the point I'm trying to sort of spark into the discussion. Isn't it true that the value, it goes beyond just it being real-time? What do you think? Is there a view on that?
I'm happy to jump in on that, Amy. So I think the real-time nature of the data that open finance enables is important. But I think one of the things that we've seen over the last 12 months is actually it's all about control and giving the business owner, in our case, control over their own data. We've come from a world where we've had credit bureaus harvesting data and creating scores which they sell to lenders, and being the primary mechanism for lending to occur. And now we're seeing decentralized data and control being placed in the hands of the business owners, which I think is an amazing development, because it means that business owners can leverage their data like a currency, which is exactly what it is. Because if you think about what's being exchanged between a bank and a borrower, the only things that's changing hands is data these days. Because in the world of a cashless society, data is going one way. That's data on the credit worthiness of a business, and money goes the other way, i.e. your bank balance increases because the loan has been approved. So if you can make that data exchange more seamless, I think that's where the real power comes in. Obviously, the more real time the data, the better. But I think it's really about giving users control of their data.
Yeah, I would agree with that point entirely. And I think basically, it now it's interesting to look at lending, particularly as that's such a topical issue now, particularly with SMEs and a post-COVID economy that we're entering. And there's no doubt that open banking has already had a great impact on credit risk. And the banking transaction data and the real-time data, yes, it is important. But I'm wondering how we're seeing this impacting lending, because it's one of the first areas that open banking has really had an impact on. And Ylva, this is really your area of expertise. I'm wondering what your views are on that.
And where we are at the moment. So to the question, how does it impact lending? For us at Simply, open finance is helping us find the yes in the credit decision. So being able to give SMEs lending. And just to sort of take a step back in that. So traditionally, obviously, SMEs struggle to get borrowing because they are very often declined by banks. Now, my passion for SMEs comes from the fact that SMEs, well, obviously, it's more than 99% of all businesses in the UK are classified as SMEs, and they drive more than 60% of the jobs in the private sector. They drive more than 50% of turnover in the UK economy. So there's an enormous economic power in the SME segment. Yet, and also there's a tendency across society, and not only in the UK, globally, where there's a shift towards even the micro business segment, those with less than 10 employees. They're becoming more and more frequent. And yet, and obviously this is pre-COVID stats, I am curious to see how COVID has impacted this, but on average for banks, they account for less than 2% of the balance sheet. So clearly it is not a priority for the banking sector, not to the extent that it probably should be. And there are a couple of reasons for that, partly because, well, there's a risk explanation to it. They're perceived as riskier, but also because there's a cost of acquisition. SMEs tend to have a very, very poor credit score. Not all of them, but most of them. And that may or may not, but my suspicion is, and my experience is, that it has to do with the fact that credit score look at a certain set of data points and not the complete picture, which penalizes the SME. And also, having the open finance will now allow us to look at a broader set of data points at a lower cost, so lowering the cost of acquisition. So to me,
the historic data point too. Isn't there a historic data point too that open banking then with the real-time element of that allows in a COVID economy to take a snapshot that's more realistic than looking at what the performance was 12 months ago, 13 months ago?
Absolutely, but this is also, and I'm sure Emma will jump in here, because this is also where you need to look at the data and then analyze the data in a way that actually makes sense. So there is an element of transforming and utilizing that data that then translates into lending decision. But for us at Simply, it is clear that simply looking at a credit score will not allow us to really tap into the power of this segment of the market unless we supplement it with things like open finance, but also other data points. But that's the exciting part of this. We're only just getting started with the open data side.
Absolutely.
Yeah, I would absolutely agree with you, Ylva, actually. And I think that, you know, where we have come from an open banking standpoint, it's so critical to be able to truly understand that data that's actually coming out of those APIs. Because if actually all you're doing is a data dump and saying, well, here you go, sift through it, you may as well have just got the SME to send in a bank statement and have underwriters working through it for days. So, it's really about what can you do with that data, what value can you add to that with the analytics, and from us, from the SME side, it's very much about looking at the classification of the data as opposed to the categorization of the data in order to understand that cash flow and see it through. But what I would also say is, obviously, we know that the credit bureau data for SMEs and the scoring of them, is sometimes challenging. But actually, what you can have is, with all these APIs that are now available, it's not you have to choose whether it's a bureau, you're going to do a bureau, or if you're going to do an open banking API, or if you're going to do open accounting. The solutions and technology is now in place for you to be able to do all of those things. And it's about actually the marriage of that data and pulling out all of those additional insights that can be delivered through to the clients that actually adds that true value.
And that's an interesting point, because it's sort of what you do with the data then as an innovator, enabled by this innovation, whether it's open banking or, AI technology, et cetera. It's almost an art or a science. So, is that really how you guys look at it, particularly from a fintech perspective? Is that, to get market advantage, if you've got an ability to use data in a unique way that's going to really personalize and give greater control to an SME or a consumer, that's a win. What would you say to that?
Yeah, absolutely. I think it's obviously, as always, I'll always sit here and say it's a privilege to be an account information service provider. But the fact is, as long as you have good tech and a good regulatory business plan, you're going to get licensed. And, the open banking APIs are just technical regulatory rails. So, from that standpoint, every AISP is on a level playing field. What you have to be able to do is truly understand, okay, what market sector you're actually going to work within and where you add that value. So from Account Score's perspective, obviously we work a lot in the SME lending space. We work a lot across the consumer lending space, but more and more use cases are actually starting to develop. And that's all in and around where organizations need to understand, on the consumer side, income, affordability, and creditworthiness. And obviously from the SME perspective, it's never been more critical to have that real-time snapshot and understand that business's circumstances at this moment in time.
And that's interesting then. So jumping ahead to the future, if we're sort of looking at the impact that's already happening and data's making, it's going to require new approaches, no doubt about it. And will that be difficult, you think, for the larger financial institutions, new business models, ways of working, even appetites to risk? Is this something that is truly going to be where open banking and open finance drives innovation? Because without that sort of approach to using this data and this technology in a different way, companies will struggle, even large ones.
Yeah, I'm happy to answer that one, Amy. So I think when open banking was introduced, people talked about the big banks being disintermediated and ultimately becoming big pots of capital, which they would then have to distribute via platforms. That is actually what is happening. And it's happening very, very quickly. So, the banks are going to have to get on board with the fact that they're going to need to share customers. The days where, the customer they offer a current account to is their customer, whom they can, cross-sell all manner of different products to. Those days are over. And I think COVID has just catalyzed that. It's the, as Emma alluded to, it's the companies that truly understands and use multiple data sources to understand the changing profile of a customer that is going to be best placed to service them. And the banks are going to have to get on board with that trend, because if you look at the average business owner now, where do they spend their time? It's not logging in and out of Barclays, is it? It's they live in Xero or Free Agent or QuickBooks, right? They because those platforms provide them with the best experience, and they have all of their banking data pushed into those platforms. So you could argue that the banks are already lost, because the platforms are where business owners want to spend their time. It will be a long way back. It will be a huge amount of investment to.
It is interesting though, because have they lost? Though, if we look at something like RBS that acquired Free Agent, is that what's going to happen as well? Though, is that how you're going to get the financial institutions to innovate? Is sort of acquiring.
Well, can I just jump in here? Because one of the things I think we're missing a little bit is that I don't think anyone wants to spend time in any of these systems. You're not a hairdresser because you want to be in your Barclays bank account or Xero for that matter. You actually want to cut hair. So I think we're slightly missing. So what I think this whole data economy is doing is enabling everyone to get back to what they love doing the most and have what I call an incredible level of automation happening behind them. You think Make Tax Digital, you think the initiatives that are coming and the way the open data economy will drive that, the smart data economy will drive that. It means that actually if you want to cut hair for a living, you'll cut more hair and you won't have to spend as much time. And I kind of go back to the main questions that everyone's got, whether you're an SME or an individual, is, what have I got? What do I need? And how do I get it? And then am I on track for it? And once you've got that sorted, you can keep going cutting people's hair, because the whole thing should surface to you, and it should be, you should be effortless. I mean, that is the whole thing. But the reason I'm here with Amy and Ylva and Emma is in Open 51 is because my slight worry is that we're not careful. This power of this data, in this automation era, might go slightly, left or right and kind of get those algorithms that automate wrong. And I think that's what we need to be more mindful of. I think we've got to think more progressively. Maybe back, Amy, to your rocket fuel analogy.
Yeah.
But Sam, can I connect to what you're saying, Sam? Because I think that really also resonates with what Matt was talking about, is the empowerment of the consumer or the SME. It's the putting the consumer or the SME at the center of the product development. And when we talk about how banks are responding to these new tools and this new opportunity, it will, and the innovation required within existing financial institutions, not only banks, but it is a complete shift in how we think about these things. So to empower the SMEs or the consumers, you need to understand also as a business provider to them, if they are empowered, you need to understand how to fit in with their model. And we hear it all the time from our customers at Simply, is that they do not want to go to a bank branch and bring in copies of paper and spend a day trying to sort out credit or whatever it is. That's the worst thing that can happen to them, because a day in the life of an SME is precious. So as providers to SMEs, we need to be very humble to the fact that it is a privilege to have their attention, and that we need to use that by making sure that we give value based on that empowerment of them. It's their data, and they're in control much more now than they've ever been before. And unless our products speak to that and provides that value, or in that way that is integrated into their business practices, then yes, we have lost it. So I think what open data does is the empowerment of the consumer or the SME, and also revolutionizes how credit is brought to them. And if you don't get that, I do think it will put you further behind.
Yeah. But
sorry.
Go ahead.
One point I do think that we should make is, with regards to the banks actually have an opportunity at this moment in time as well. All said and done, the banks have had this data for a very, very long time. And what the banks do absolutely recognise now, and open banking has been the catalyst for this, is that there is a value in transaction data. And if we look at ourselves as consumers, as our being our own little data vaults, with the control over our data, inherently we don't necessarily want to be chopping and changing our bank account. What the banks do have the large volume of customers, and they can actually use this data today for the better use towards getting personalized products to the consumers and to the SMEs alike. It's just not easy for the banks to be able to make those changes, and it takes buy-in right across the board, and there's legacy systems that they have to deal with in order to get that implemented. But they do have the opportunity to do it and embrace it.
I would say everyone's got the opportunity. Like every company now, I think, has got the opportunity. The bit that I would love to see, if I think when we've kind of really made it, is when we've actually related in a highly personalized way back to the individual. So can you imagine if you expressed a loan to that hairdresser, that this is going to mean you have to cut 3 more people's hair a week for 3 years to pay this loan off? That's the cost to you as a business, and to you. I mean, I think when we can get that personalized, I mean, to me that would be amazing. But it's within our sight now, and I think that's the bit that I would say, Emma, the banks will struggle with a little bit, whereas what you're doing and the team here, all of us probably would find it much easier to get our heads around, because we're much closer to the coalface of the change, is the power of the data. And I think that's what everyone's missing a bit.
But that's data literacy, I think. And that's an interesting point, because not only, has there been criticism in the past about how much consumers and SMEs even have heard or understand what open banking or open finance is. It's the need to sort of understand the power and the potential control that they do have over their data now. And I don't think that awareness exists. I mean, Ylva, you've mentioned your customers maybe having more awareness when they're coming to you, and that's how they're sort of getting educated. I'm not really sure. But is it important that there's a wide, spread understanding of how things are changing now and what control that gives them? Or is that something that will naturally occur when there's a value proposition and a product that they want?
Yeah, from my point of view, it's all about the value exchange, right? So I don't think there needs to be a big marketing campaign saying, this is open banking, this is open finance. It's about having that in order to receive this, we need you to be able to do this. And as long as there is the value there for that customer, and that, and critically, it's, they have the choice, they have the control, and they have the complete transparency. Consented data is so meaningful, and consent is not something that's going away anytime soon. So really this is just the start of that.
I think what you're referring to, Amy, is probably an ongoing discussion that I've heard for years and years, especially in the field that I work in, asset finance, which is a little bit niche. And there's been this debate: do we need to educate customers about what is the difference between a hire purchase and a lease, or conditional purchase? Do we need to educate customers? I always say that what we need to do is educate ourselves about the customer, so that we can speak their language, that we can understand their challenges and their opportunities, so that we can position ourselves embedded in their life. And that's just the other perspective on this. And I think that goes also for the data. I think what we need to understand is, how can we have these conversations with our customers? Because we do need to have them with the customers. And I do think we're all better off if customers have an understanding of the value that their own data could give them. But we need to do it in a way that works for them. Yep. And so, yes, I don't really agree with them. It's about that value exchange and making sure that we position it correct, not just talking about what it is from a technical point of view or a financial point of view.
Yeah, and I think that picks up on Sam. It's being customer centric and not just paying lip service to it. So it's putting the customer at the heart of all the proposition developments based and enabled by the data. Would you agree with that, Sam? Have I summed up your words appropriately?
Yeah, I think it's it's the customer centricity, and I think the consent-driven data economy is right at the heart of that. And I don't know how many of you are knowing, but it's just data, just the way that we're followed and tracked around the internet changes. The legislation is changing, and by the middle of next year, we won't be able to be tracked in the way that we're used to being followed around the internet. So the whole shift towards consumer consent-driven data is not just in open banking and open finance. It's kind of across the board. And that's fantastic for going back to what Matt and Emma were saying about the customer is just going to get more confident and understand that they are in control of their data. I don't think you do need to talk about open finance, but I would like to see us. I would like to see all of us using that data in a way that is more personalized, so that we resonate more with the customer and they can make more informed decisions. Because going back to my strange analogy, which is about putting it in the perspective of the customer, I either know whether I can cut 3 more people's hair a week to service this loan, or I don't. I mean, if it's 20 people more I need to cut hair, rather than 3, maybe I'm thinking, do you know what? I'm not able to do that. So it's all about informed decision making, isn't it, for me? And data is so powerful at helping you make informed decisions. And that's what I'm hoping we'll see more of. But I think it's from the innovators, so that it will be from the people that sit, to me, in front of the banks, because the banks traditionally, I don't think, are very comfortable actually with personalizing the data for some reason. I don't know if it's because they feel it's not their place to do that, but if that is in their DNA, then that's quite hard, isn't it, to suddenly become very customer centric and do what Yeleva was saying before about stepping into the shoes of the customer. Quite tricky.
It requires a massive
Sorry, if I can just add, I think we should also not underestimate the shift here, because if we've had years and years of practices in financial services which are built on analytics around credit, consumers and businesses have been told to build up their credit profile, and they might actually be better off by taking out a loan and servicing that perfectly than not taking out a loan. And I think that's business model have been built up for years and years around being able to track, are you meeting your payment obligations or are you not, as a primary indicator of whether or not you're a good credit. And what we're now talking about is a completely different set of data points. And it goes into a lot more sort of detail. It tells you, are you living within your means or are you not? And maybe that fundamental cultural shift and how you assess credit that is enabled by open finance, it's massive. So it will be difficult for the whole financial services industry to shift perspective, but it has to happen, and it will happen. And if it's not driven by banks, it will be driven by other people.
I think that's the point too, and I think. Sorry, was that Matt? Did you want to come in?
Yeah, I was just going to say I've always felt that the credit scoring system which penalised conservative consumers or businesses who chose not to borrow is perverse, because and it's due to the limitation in the data points. So I think, Ylva, you're right, that model needs to be turned on its head, because how can you have a system which penalises somebody who has decided that they're just going to fund their business using free cash flows? Because for me, that's just a good business. Fair enough, they might not grow as quickly as a counterpart who took out a loan, but they shouldn't be penalised for that. And hopefully, open banking will enable that system to be flipped on its head.
And I think it does. I think that where you have completely different data points coming out of open banking that aren't available in the bureau space, right? So if I look briefly at the consumer side, where somebody maybe scored as thin file when they're applying for a loan through the bureau, actually, just because you're thin on bureau data doesn't mean you're thin on transaction data. And what we see in the transaction data is additional data points in and around council tax payments, rental payments, all of those information that aren't available in the bureau, which actually shows that somebody is incredibly creditworthy. And one of the opportunities that there really is here as well is something that we talk about in Open 51, being that sort of the gender data gap. And open finance certainly has the opportunity to address that across the globe, because in the data that I see, I can still see that women are earning 84% of what men actually earn, but actually based on their spending, they are more creditworthy than the men. And so there's already that opportunity there, and evidence to show that this can actually start to shift the way that credit is being issued. And for me, I think that's super exciting and something that I hope that everybody embraces.
I think that's the key, though. We hope that everyone embraces that and addresses where those limitations in the data are when there is a bias, particularly as we're still at the early stages. But if we've just had a discussion where we're waiting for the banks really to push forward on open banking in a more customer-centric approach, will it be another multinational that steps in, or a GAFA that comes in and does all of that? And then how do we fix, data issues like gender data bias? Do people feel that is a real legitimate challenge, or are they more confident that those things will be worked out as we move ahead and land in, sort of products like pensions, where it will be far more important to have those things like gender data bias eradicated to give a good product for women? That's a Sam question, obviously, because of your active role in pensions.
Well, I think it's the gender pay gap that Emma just mentioned. I mean, it's far worse in pensions, as most of you probably realise, that women are so underserved in the pensions space, and that really isn't going to change for a number of years, because it's obviously built in. It gets baked in, and it's not fixable very quickly. So I think anything that the algorithms and what we do in terms of how we communicate with women around their savings and their investments is pretty important, because obviously with pensions, when you get to 60, 70 years of age, there's not much you can do about it. It's pretty binary. What you've accumulated is what you've accumulated. And I do get a bit upset about the fact that also we see that even just in the consumer apps, in terms of money management, there's still a huge bias towards men that will take that up naturally. So something between 70 and 80% of people that will use or be drawn to a consumer money management app will actually be men. So I think the more that all of us can do, to try and help women feel more confident and comfortable with money really is very important. Otherwise, and the irony is that the women live longer, so we need more money for longer, actually. So it's really important. One of the great things about open banking that has enabled the pension industry to do something which I think has actually already made a big step forward is to put what I call today's money with tomorrow's money. So the fact that you can actually see your day-to-day spending with actually absolutely against what your tomorrow pot is, it already has given a bit of visibility to your future money that actually today we have not been able to do very easily. So I'm really, so that's the positive against, kind of quite a negative backdrop.
But can I go back to your question, Amy, which is around, the bias and how we tackle it? So if biases, I mean, we can look at stats around lending decisions and funding going to women, etc. And we it's clear that there's biases built into the system already. It's easier to get credit if you're a man. It's easier to sort of get investment if you're a man. So that's it, how it is today. The fact that this new data set comes along for lenders and investors to use when they make their decision does not necessarily mean that biases will go away, because there was no reason for bias to be implemented in the first place. If you are aware and you test outcomes against a set of standards, you would be able to identify biases, but that has to happen consciously, and that has to happen through a coordinated and consolidated effort to ensure that mistakes are not repeated. There are no guarantees that come for free with open finance. There still needs to be a conscious effort to ensure that we address this.
But there's opportunity, and I think that's where the optimism. And it's then how do we make sure we seize that opportunity, I think is the point. And it's not just gender bias. There's all sorts of biases in the data. And I'm leaving it to the market for innovators, here and there to drive forward. Will probably undoubtedly take far longer and might not have the great success it would. I mean, do you think there needs to be a regulatory impetus to look at this? Or how could we ensure that we don't sort of just hope for the best? That's a tough question. I'd be curious to see what people think.
I think you have to legislate. I mean, without pensions legislation for the providers to give the core data, that really you should be able to find out on your pension, that wouldn't have happened. So I'm and there's no way the banks will have given this data. There's no way that would have happened without legislation with the open banking. So unfortunately, I think we've got to legislate in order to enable innovation. So I think innovation doesn't happen on its own, but it can be stifled by, if you think about the financial services sector, with banks, the credit bureaus, and really the payment rails. So, WorldPay, Visa, MasterCard, the commission-based payments. And those three sectors were controlled by quite a small group of companies. And without legislation, I don't think you can innovate to a degree, but without the disruption across all of those three, which AISP for the banking sector, PISP, so the payment initiation for the payment sector, and I guess the two together to kind of, chisel away a little bit at the credit bureaus. But I mean, just the other day, it upset me in the BBC News. I don't know if you saw it, where a lady couldn't get a COVID test. In fact, from Australia, she's been here for a while. She couldn't get a COVID test because one of the credit bureaus couldn't identify her. And that will be because, and it's not because she wasn't on the electoral roll. So she is on the electoral roll. So, she couldn't understand it. And I think that just goes to show how, the legislation has to open up this market a bit more. And that, especially for open finance, Amy. I mean, especially if we want to go to your energy bills, my Vodafone. But if I want all that data, in fact, I'd like to get from Amazon at a breakdown, where I spend, where I actually shop. I mean, I actually didn't even know the shops I buy stuff in. It all comes from Amazon, but it doesn't. I'm shopping at all sorts of places. I think it's got to go right the way through.
No, that makes sense. And I think in a sense, then it looks at who is the gatekeepers of this open data world that we're living in and how we're going to manage that moving forward. And I know, it remains unsolved. And I think that's probably going to be the biggest challenge that we face. And that's going to get maybe perhaps more complicated as more people enter this space, whether that's, GAFA is getting involved or telcos, or, we're going to expand quite rapidly. We've seen that with COVID as well. It's sort of puts speed at the pace of developments that are going forward. And I don't know, what is the impact that COVID's had? Is this something, particularly looking at SME lending from one perspective, do you feel we're in a better position to help with the unsustained debt burden SMEs are carrying? Ylva, you've mentioned 99.9% of private companies in the UK are SMEs. This is a significant issue for all of us. What's your take on the benefits that this new open banking, open finance, open data has to help us manage this issue?
So I think it's huge. As a lender, and obviously under requirements to report payment performances into credit bureaus, etc., it's been interesting to watch how much effort has gone into dictate as a lender what data to include and what data to exclude to ensure that companies are not penalised unnecessarily because of COVID impact, which in itself just tells you that there is something flawed in the model, in my opinion. I think for us, being able to sort of see through the credit score, being able to see at open data points, allows us and helps us massively making the right decisions. So as any finance provider, we've had customers needing support during this crisis. A lot of our customers have reached out, and we've been able to work with them and using open banking data to tailor a repayment model that works for them, given their current live data based assessment. And that's huge, that's unique. And without that, we would have been making decisions blind, or having had to sort of sit through a massive administrative cost and taking way too long to be able to get back to them. So just being able to help customers with open banking has been huge. Now, we're only at the beginning of the impact of COVID. And I think what I feel is that there's no sitting back and relaxing. This is going to be with us for quite some time. Customers and SMEs will struggle for quite some time. And we as lenders have to really be quick in responding to them. And what we can get from open finance and open banking helps us do that. So it's massive. It's a huge win for us to already have these data sources.
Just to add to Ylva's point there, I think the most important thing here is to align incentives. And the same is true across every industry. If you look at what's happening in the social media industry, we have to make sure that organizations and users, we align the incentives across the board. And I'll give you an example of how we can do that within the SME lending space going forwards, because obviously there has been an unsustainable amount of debt issued by the banks and other lenders this year, and SMEs are not going to be able to burden that debt, and we're likely to see high levels of insolvency, into next year, because we certainly haven't seen that insolvency avalanche so far, because so many businesses have been propped up by stimulus. But just back to the alignment of incentives point, if you enable customers to opt in to open data, and I think this is where the regulator can have an impact, if it becomes a mandate that you have to enable the customer to opt in to provide their data, because otherwise all of the biases and the out-of-date information that exists within the bureau-based credit model exists. But if it's mandated that me, Mr. SME, that's been around for 9 months, I incorporated my business in March, if I'm allowed to, irrespective of which regulated lender I go to, I have the ability to submit my credit file, or it's been referred to as a credit passport in the past. And that's more information for the lender. That, if that enables them to assess my financial health better and they lose less money as a result, we've aligned the incentives there. So it's actually mandating the contribution, the ability for me to contribute the data that will align incentives. Because at the moment, it's kind of people are adopting it in a way which is like, oh, can this help me to take less risk? Or can this help me to attract more customers? Or can this help me to be more efficient? But if the regulator says you have to give this option for people to contribute data to their profile, I think that's when the proliferation of the technology will happen, and biases will be smashed to pieces. Because if women are better credit risk, and I'm sure that is the case in a lot of cases, then the bank's incentives will be aligned to that, because they want to offer loans to the people who are the most creditworthy, right? So I think the regulator has a role to make sure that this technology, people have a chance to adopt it, basically, is what I'm trying to say.
That's a really good point, because we already have, I mean, there is a company called Credit Passport that actually is doing that file for SMEs. And I think those types of products are going to become very, very important for SMEs to get through what is estimated to be, 40 billion of unsustained debt that the SME sector has taken on in the UK alone. So I don't know if there's any sort of final comments people want to make. We're sort of heading towards the end of the panel in our time today, but it seems that there's real opportunities here, some of which are being realized already, but there's still a long way to go. And where we have a challenge is to make sure we get to the end place where we want to. We want the data to be smart. We want to make sure that it's got integrity, it's robust, it's without bias. And the products at the end are doing exactly what the whole thing of open banking, when it first started, to go back to Sam's point about the 1D version, is delivering real benefits for consumers and SMEs. So perhaps just going around quickly, what do we see over the next, the next stage of development? What's the real sort of one opportunity or one challenge that people are focused on? Should we start with you, Sam?
Yeah, so I think if we just look a little bit closer to home rather than further out, I really think the next best step is to try and help people, and it's really the same with its consumer or an SME. But given what we've just talked about, this incredible burden of debt that we're, I guess, all going to shoulder, wouldn't it be good to potentially use what we've got in terms of our day-to-day running of our businesses or our personal finances in a way that it means that you can be informed about how to get from A to B. So just use it to tell me, or my business, what do I need to do next? What is the next best thing I need to do in order to get from A to B? So let's keep it quite transactional and quite binary at the moment. And I really don't think that's too much for the world at large to be asked to do to service the SME or the consumer. So what is the next best thing I can do with my money to get me, further forward, better progressed? That's what I'd love to see everyone focused on a bit more. With obviously the power of open banking data and open finance data, but that would be incredible, I think.
Yeah, no, it would be. Emma, do you want to jump in? Your view?
Yeah, I mean, very similar to Amy. To Sam from me. It's really that financial education piece, and whether it is being used in credit decisioning, whether it's being used in debt collection. For me, it's very much around that financial education of consumers and businesses, and those and they can be very gentle, simple nudges on, if you do this, this will improve for you. It's going to take time for this to become the norm. But I look back and go, many years ago, none of us were used to sort of seeing our credit scores on the aggregators, and I think everybody looks at their free credit score and has some kind of understanding of that. This to me takes it to the complete next level, and so I really want there to be the focus on financial education. It's available to be done now. We should all be doing that, and I think really we need to be looking at bringing that right in at sort of school level, in my opinion, so that it isn't the case that people get to 18 and go, okay, right, I don't have a credit file, I'm going to take out a loan that I don't need. So we've got the immediate financial education that can be done right across consumers and SMEs with the data, that's available. And then looking forward, it's about bringing that financial education in to the youth of the nation, and then progressing it from there.
Great, thanks. Ilva, anything to add?
I'm quite excited about, so just to give you an example, a colleague of mine in our credit department was a veteran, very experienced, etc. He was quite skeptical. Open banking was not high on his list of, not high on his wish list of things that he wanted me to deliver. So why would I wait? And I did it anyway and presented, the results, etc. He then immediately understood and then immediately wrote out to all our customer-facing staff and said, "This is brilliant, try it. I promise you that I'll make a better decision quicker than before if you give me open banking data." And I'm just quite excited about that light bulb moment with various departments in the industry. And I'm thinking various lenders, various providers into the sector. What else can be done? What other value can we find with this? What's the unknown opportunity that lies behind it? And so I've spoken a lot about lending, but as I've said before, I think we need to remember that it is a privilege to sit in front of an SME. The hairdresser doesn't have much time in a day to actually have these conversations. So when we do, we should not just talk about, how we can push our product towards them. We need to find those additional value adds that we can present off the back of the data that we see. And where that takes us, I don't know, but that is the exciting bit to me. And there, you have to also remember the how you present that, how do you use those nudges in a fair, transparent, and with the integrity in mind of the product offering to avoid repeating biases of the past and to avoid disadvantaging consumers.
Absolutely. Thanks. Matt, what about you?
Yeah, mine's sort of just focused on 2021 and the challenges ahead in the SME economy, which are this enormous amount of debt issued predominantly via the Bounce Back Loan Scheme, and how we can use open data for goods and how we can use open data for forgiveness for people who tried to do the right thing, whose businesses are no longer viable through no fault of their own. These are good, honest people who are trying to do the right thing, and using the contribution of data for forgiveness of that debt. I.e., if you were a hospitality business who didn't really want to take out debt, had you're employing lots of people, your restaurant was doing great, and all of a sudden your income has been completely pulled from beneath your feet by the pandemic. Should that person be forgiven? And on the flip side of that, we're also then weeding out the large numbers of people who have defrauded the taxpayer by taking out bounce back loans when they know they didn't need them and are now driving around in sports cars, because they are not going to be the people who are contributing their data, and then they should be pursued through the courts for that money, because that should be treated as any other loan. But for the people who are good, honest business people, contribute your data, connect to your bank account, connect to your accounting package. Okay, I can see that you did everything that you possibly could to keep people employed, to keep your business going. You should be forgiven that debt. And the banks and the BBP will need to work out how that's going to happen. But I think that is an amazing application of open data, but to apply some fairness in what's been a pretty wild year. But a lot of people, COVID wasn't their fault, right? They're not able to pay that debt back because their income was taken from them. So I think that would be a really neat use case.
I think that's a good note to end on, in the sense that data is going to give us far greater opportunity to navigate ourselves through the post-COVID economy. And let's just hope that everyone does their utmost to make the most of it. But thanks, everybody. I thought it was a really fantastic discussion, and I really appreciate that. And thanks again to the team at Open Banking Expo. Hi, thanks everyone for joining us today in the panel. I think we have a few minutes left. I know we've got a hard stop today, but we can take some of the questions that came up during the discussion. Unfortunately, Sam's not able to join us today, but the rest of the panelists are here. So let's kick straight off. One of the questions, when do you think we can expect the utilization of both open data and credit scores to help banks choose the right SMEs to lend to? What are the other elements that banks should consider to ensure that we can see more lending to the SME sector? Who wants to take that first? Ylva, do you want to jump in?
Yeah, I can. I think speaking only from what I see, but it's happening right now. It's not a question of when it will start. It has started. And to what extent it's being adopted to banks or by banks, I'm not 100% sure, but I do know that there are alternative players out there that already do this. And when it comes to other data that's useful, a lot of lenders pride themselves on having the magician in the underwriting department that's able to see through and find the right answer. I might less believe in the magician and more in the creativity around the data you look at, and it all depends on what product and what segment you're operating in. So in our space where we do asset finance, it's really important to tap into data around the asset, not just the credit profile, and understand the security that lies behind that asset. But other lenders have different sort of segments that they target, and there need to be that creativity about what data points to target or what areas to sort of focus on.
Yeah. So it's the art of the data, really, is it? I mean, does anyone else want to provide any?
Yeah, I was yeah. Go on, Emma, after you.
Sorry.
I was just going to say 2020 was a very big year for SME lending, but I think 2021 will be another very big year. And there's a couple of reasons for that. Firstly, we're not seeing the record number of insolvencies that we expected to at this moment in time. And I think that's largely due to the stimulus which the government, rightly or wrongly, injected into the economy to save a lot of businesses. But not just that, but also the number of companies that are filing meaningful credit information at Companies House, which obviously the bureaus are heavily dependent on, is falling year on year. So I think, relative to where we were 5 years ago, I think 95% of companies now don't publish a profit loss statement at Companies House, which means it's very, very difficult to get an idea about how a company is performing using traditional data. So I think it's going to happen very, very quickly. And the other factor is that there's been record numbers of companies being incorporated this year. And I think that's largely because the work is changing. Many people have taken the decision to set up on their own due to furlough or redundancy. So I think that the time is now, and people who don't choose to adopt alternative or open data alongside traditional credit scoring will find themselves falling behind.
Yeah, and I think one point I wanted to make there as well, Amy, was just in terms of the utilisation, what we're starting to see is that utilisation is being driven by the brokers, because actually the majority of SME finance does come in via that broker market. So it's a case of ensuring that you have enough lenders using the solution, and we've certainly seen, just to echo what Ylva said, the alternative finance market utilising, but then on that front end, that the brokers are really starting to adopt and utilise the solutions that way.
Okay, thanks. And let's jump to a slightly related question. I mean, what can we do, if we can do anything, to ensure that banks are prioritizing SMEs, considering that they're so important to our financial infrastructure in UK PLC? Is there anything we can do?
Well, I don't think that you can ensure. I think that you can encourage them to do so. So that's really where I sit on that.
The SME segment is massive and important and all of those things. And I don't think it's a matter of encouraging or ensuring that banks do lend to it. There is a business opportunity there, and it will be tapped into, if not by the big banks, by alternative lenders and new finance companies emerging into the scene. I think it's more a question for larger banks if they want to be serious in that field or not. And I think I said earlier about the fact that SME lending is a small portion of banks' balance sheet traditionally. If it isn't a top priority for them, then it isn't, and that's fine, because the opportunity is there, and other people would then tap into it.
No, I agree with that. And then let's just try to get one more question in before we run out of time. Does the panel think that open banking has a major role to play in assessing businesses who are involved in CBILS and the BBL loan schemes before collections are started? I don't know, Matt, is that a question you want to jump in on?
Yeah, I feel pretty strongly about this subject because it's infuriating reading the news about up to 1/5 of bounce backs loans being identified as fraudulent already. So there is a significant write-off is going to need to happen at some point, and of course that is the taxpayer who is liable for that. I'm also extremely sympathetic to business owners who, through no fault of their own, had their income taken away from them because of this ghastly pandemic, which has led to all of the measures and action that we've all had to take to prevent the spread. So I think one of the mechanisms which relies heavily on trust and just requiring people to be open about what they've been spending their money on, which would be a really neat way of sort of introducing a mechanism for loan forgiveness, would be to say, you need to connect your data sources, you need to connect your bank account, you need to connect your accounting package, so that there can be some sort of eligibility checking done to see whether a business should be forgiven their debt or some of that debt should be written off, rather than have them pursued through the normal means, through the courts and that sort of thing. So I think there is a real opportunity for open data being a force for good in that forgiveness process.
Yeah, absolutely. Would you agree, Ylva, with that?
Yes. The thing about it is, though, that in my world, SMEs, and this is before pandemic and before CBILS and bounce back loans, they have good years and bad years, good months and bad months, and reacting with a black and white default sort of process, rather than looking at how we can actually support the SME through difficulties, is very short-sighted, in my opinion. But on the other hand, as a lender, you need to make sure that you manage the credit you've extended. Otherwise, it's also very short-sighted. So for us, what it means is that open finance, if you use it correctly, you're able to really understand the details of the circumstances of the borrower, and then make sure that you work with the borrower to establish a payment plan that is aligned with cash flow. And you get, with the open finance data, you get a lot more closer to reality, and you have something to base it on. And that allows you to be a lot more customer focused and a lot more customer centric, also in your collections and your coverage processes. So yes, it gives you that additional lever to pull to actually work out something that is good for both the lender and the SME.
Yeah, that personalization of the data that's available now, and in fact, it's real time, it makes all the difference. I'm very conscious we've run over time, and I'm really sorry we couldn't get to all the questions. I would like to say that the panel was sponsored by Open51. We do have a website, which is open51.io. You can reach us there. We'd be very happy to answer any questions. Sam Seaton's a member of that group as well, and plus, we're sort of very happy to pass anything to Matt that may have come through as well, even though he's not an active member of a women's group, but he's a supporter, I'm sure. Anyway, thanks very much for joining us, and have a great afternoon.